Apple told us the iPhone 17 would be the future. A leap forward, a must-have, a statement. But what if the iPhone 17 is not a leap, but a warning? What if this launch is the start of Apple's biggest problem in years? $2,000 for a phone that looks almost the same as last year's model. Customers angry, regulators knocking, rivals racing ahead, and whispers, could some of this be intentional? Stay with me. By the end of this video, you'll see the iPhone 17 differently forever. Once upon a time, Apple didn't sell gadgets, it sold magic. Steve Jobs walked on stage and people believed the future. Every new iPhone used to feel like a revolution. Owners weren't buying a phone, they were buying identity. That brand trust is priceless. It turned Apple into the most valuable company in the world. But trust is fragile. It takes decades to build and one bad misstep to crack. And with iPhone 17, a few cracks are starting to glow. Top-end iPhone 17 prices make headlines. Premium glass, premium metal, premium sticker shock. For many, the top model is close to $2,000. Think about that, $2,000 for a phone. So what are buyers actually getting for that money? A slightly faster chip, marginal camera upgrades, and a new finish. Not exactly the kind of leap that justifies a car down payment. Imagine saving for months, skipping vacations, just to open that white box, only to feel underwhelmed after a week. That feeling spreads fast on social media. And while that anger grows, Apple's economics still look incredible. The cost to produce a flagship iPhone, materials plus assembly, is a fraction of the retail price, a gap that has kept Apple's margins far higher than the industry average. Price alone wouldn't sink a giant, but combine it with the next problem, and the picture changes. Apple used to lead by inventing. Now, critics say Apple often refines. The iPhone 17's feature list reads like incremental polish. Better computational photography here, a slightly faster chip there. Useful, but not game-changing. Meanwhile, competitors push radical form factors, foldables, rollables, radical AI cameras, and bring new experiences that feel fresh. When people stop experiencing wow and start calculating worth, upgrades slow down. Buyers keep phones longer. Replacement cycles stretch from 2 years to 3 or 4. That's exactly what we're seeing. So is Apple stuck in a cycle of safe bets? Or is this deliberate? Apple isn't just battling consumer anger, it's facing legal and regulatory storms. The EU has forced common ports like USB-C for phones sold there, trimming one of Apple's hardware differentiators. That law changes hardware choice and increases costs for compliance. On top of that, Apple has been sued over allegations it intentionally slowed older iPhones after updates, a controversy that led to a large settlement and left many users suspicious. Combine regulator heat, repair rights fights, and the constant legal costs, Apple's public image and operational freedom are increasingly constrained. And while lawyers argue the market is sending signal sales patterns that make analysts uneasy, narrator, matter of fact, data matters. In recent weeks, some market trackers reported a decline in Apple shipments in China ahead of the iPhone 17 launch. Specific short-term drops were flagged as signs of loss of momentum in Apple's biggest overseas market. China is vital. It's more than sales. It's supply partners and brand perception in the world's largest smartphone market. If Apple is losing ground there, it's not just a revenue line, it's strategic friction. But numbers can be parsed many ways. Pre-orders can spike in some places, even as shipments dip elsewhere. The point is this: the market shows signs of stress that iPhone 17's launch will either mask. Apple drives huge margins from hardware. But Apple's growth story in recent years relied increasingly on services, App Store commissions, iCloud, Apple Music, AppleCare subscription bundles. Those streams are sticky, but they depend on a massive installed base of happy, engaged iPhone users. If iPhone upgrade cycles slow, it affects device revenue and the funnel to services. Remember, when users don't upgrade, accessory sales, paid subscriptions, and repair volumes change. Those ripples hit earnings and investor confidence. Apple's net profit margin remains strong, but the engine depends on continued momentum from devices. And there's something darker. Some insiders whisper about a practice with a long and controversial history. An ugly phrase floats around tech circles: planned obsolescence. It sounds like a conspiracy theory, but there's legal history. After claims that Apple updates reduced performance on older devices, Apple settled a major dispute, a settlement that validated consumer suspicion and left a mark on brand trust. So here's the uncomfortable question. Could Apple ever benefit from underwhelming upgrades? If customers perceive less value, they might still be nudged into the ecosystem by services, trade-in programs, or an aggressive marketing plan that makes the next model irresistible. It's not glamorous, it's business. Some say iPhone 17 is too underwhelming to be accidental. Let's step away from numbers. Consider the human side. One customer told a creator on TikTok, "I saved for months. It feels like a waste." And another wrote on Reddit, "I upgraded and felt nothing. I regret it." These real voices matter. Loyalty collapses not because of headlines, but because millions feel small personal betrayals. And when loyal users stop being evangelists, the marketing machine loses oxygen. Word of mouth is impossible to buy. Maybe there's a grander game here. Apple is not desperate. It's diversified, AR/VR services, even automotive rumors swirl. Maybe the iPhone is being positioned as a mature, cash-generating product, while Apple invests in the next platform that will define the company for decades. Recent reporting shows Apple testing foldable production and exploring other form factors, signals that they're prepping for a future beyond the slab phone. So, which is it? A company losing its edge, or a company deliberately shifting the chessboard? Both ideas can be true at the same time. Apple can be brilliant at long games and clumsy at public perception. Would you prefer Apple spend on the next revolution or fix the phone that made them famous? Tell me in the comments. I want real answers. Let's imagine 3 realistic futures. 1. Recovery. Apple listens, prices stabilize, new meaningful features return, and trust rebuilds. Sales bounce back and services grow. 2. Slow decline. Consumers hold longer, margins compress, competitors steal market share. Apple remains profitable, but less dominant. 3. Radical pivot. Apple quietly reduces emphasis on iPhone hardware and bets everything on AR, AI, and subscription ecosystems, leaving the smartphone era behind. Each path has consequences for investors, employees, and everyday users. Given Apple's cash reserves and talent, a pivot is plausible. But consumer trust is the wild card. It's hard to buy back once lost. Is the iPhone 17 a disaster? Not necessarily in the short term. Apple will still sell millions. But as a barometer of the company's future, it's a red flag. High prices, incremental upgrades, market pressure, and trust erosion create a storm that Apple can navigate, but only if it chooses the right moves. Now, I want to hear from you. Would you buy the iPhone 17? Do you think Apple is rehearsing a pivot or repeating a mistake? Comment below. I read every thoughtful response.